The Nifty and Sensex tanked over 3% in trade today, with over rupees 13 lakh crore in wealth wiped out in a single session as US President Donald Trump's retaliatory tariffs sent shockwaves across the globe. Inflation fears, a looming consumption crunch and recession alarms had investors running for cover as the Nifty and Sensex plunged deep into the red. However, by the close, the Nifty 50 clawed back intraday losses to settle about 22,000, while the Sensex fell over 2,000 points in trade. Let's look at the key factors that sparked the widespread sell-off in trade. The primary reason behind the intense selling pressure is US President Donald Trump's reciprocal tariffs. Ever since the president shared his tariff announcement on April 2nd, the bearish sentiment has dictated the market mood, with intense selling pressure seen across the Wall Street, Asian and European markets. China quickly retaliated, imposing 34% tariffs on US imports, triggering widespread panic across global markets. President Trump defended the tariff move, said countries were dying to make a deal, and brushed off market pain as temporary. However, fear of the global trade war and slowing consumption have given bear reason to charge. Across the globe, several Asian and European markets plunged into bear market territories as risky assets such as equities have borne the brunt of the selling. The Taiwan benchmark halted trading while Japan's benchmark index Nikkei 225 entered bear market territory. Hong Kong's Hang Seng index saw a free fall, closing lower by the whopping 13%. In Europe, Germany's DAX and London's FTSE 100 also saw serious selling pressure. The reason most investors are selling off their equity holdings in droves is due to recession fears. Goldman Sachs has revised its forecast, putting the chances of US recession at 45% in the next 12 months, up from its earlier estimate of 35%. JP Morgan Chase has gone a step further, warning that the US economy may enter a recession this year itself. Volatility has spiked, with the key fear gauge India VIX jumping 65% in trade to 22.79 level. The volatility index marked one of its sharpest single-day surge in 5 years. Market experts said that such a steep spike in the VIX was last witnessed during the COVID-19 crisis, and its recurrence now signals panic in the system, with the potential for wild swing in either directions. So what's the path ahead? Well, according to the experts, the tariff impact on India's exports is expected to be lesser, given the country's diversified trade strategy and the fact that the tariff on it are relatively lower versus Asian peers. As a result, Indian equities have also outperformed peers. Going ahead, many experts believe that betting on pure play domestic focused stocks should result in strong gains. However, for the more risk-averse investors, it is best to adopt a cautious stance and wait and watch as this narrative plays out.